Now, let me shift focus and talk about the NBFC in particular. Now, you have a presence there, and we have just come out, or optically it looks like the NBFC crisis may have eased off a little. How do you ascertain the situation here? You are in the business. You have been lending to the real estate sector. Many who have been big critics have also mentioned that NBFC AQR should be done, and probably real estate will get a big hit if that is done. Which side of the debate are you in?
Look, I think the NBFCs may have brushed a lot of the credit issues under the carpet, so I think they need to be looked at. So I'm absolutely in the camp. Let's do a real AQR on the banks, and let's do a real one on the NBFCs. Okay, but real AQR. So that's number one. As far as NBFCs are concerned, I think I think it's pretty clear now. They're going to be the NBFCs that are well governed, have the right business models, the right funding plans, and the right liability structure, and those that don't have. People who are just sort of spinning a big story that they can grow at a massive rate and have X kind of leverage and, Y kind of valuation, I think those days probably are over. There is a structural correction going on as we speak, and I think that correction is for the good. I mean, how can you have things trading at 4 or 5 times book value when the net interest margins are barely 1%? So I think that's changed for sure. So I think when this settles down, private equity capital will automatically flow towards those that are better on the scale of ROE, sustainability of ROE, and the whole funding structure, which is not necessarily in the ROE. So we'll be very clear about that. I think the second thing is that which NBFCs are competing on what basis. I mean, there has to be a sustainable advantage the NBFC has. And I think that's a big question mark for a lot of people, including for us, as we look at diversifying our business, to say, oh, we'll get into housing business and do what, right? We'll get into SME financing. How do you compete with these big banks, right, who have a massive advantage over us? They have the current account, they have the working capital account, they have cash management, they do export-import for these guys. How can we just come and capture that space? So I think NBFCs will have to ask themselves, what is their sustainable advantage and why are they doing what they're doing? And can that sustain against a banking system, private and public, reinvigorated with a massive advantage of funding cost? So I think that's the big question. And that's why when I think about diversifying our business, I keep asking myself, we'll diversify, fine. But, what are we getting into? Because what we do very well. Structured finance, we understand very well. Structured credit on real estate, we understand well. And that's a space, by definition, is non-banking. Banks can't do it. Or even if they could, I think we'll be nimbler. As NBFCs as a whole, we are nimbler, we are faster, and probably more sharp on risk. So that's an area I think we will definitely keep building. So
easier regulations also, and not coming directly under the RBI scanner, also gives you that advantage.
Yeah, it does. Yeah, that's absolutely. I mean, you get that formalization. Absolutely, it does. Yeah.
All right. So at the moment, is the matter a little worrying as somebody who's in the NBFC sector, and how do you see the outlook going forward?
As I said, we're not worried about our stuff. The question really is that, will the valuations correct, and then will there be enough credit flow to the NBFCs and equity flow to them? I think that's key. And I think the valuations are getting corrected. If they become very attractive, we would like to buy some NBFCs ourselves.
Okay, so does this give you enough opportunity, and what is it that you look out for?
Too early right now. We are looking for things to tuck into our own financial services business, ex-private equity. But I think we'll do it, as I said earlier, with a little bit of caution, not by just doing DD of the business diligence, but why are we buying that business, and how does it fit into a grander plan? Can this company over time be diversified enough and differentiated enough to get maybe listed or whatever? Otherwise, just buying for bulking up, we don't need to do.
All right, so listing, that has been talked about internationally also, about your plans of going public with the NBFC space. Now, how is that really maturing? What is your strategy when it comes to having a wholesome portfolio there? And is that going to be different from your investee company, Avendus, that is also probably planning for a listing?
I think firstly, between Avendus and KKR, and just to be clear, there is just no linkage from that point of view. Avendus is run by Ranu, Kaushal and Gaurav, and we are an investor with them, a significant investor from our fund.
Right.
So we work with them like an investee company, and they have to build what they have to build, and I think they are on a fantastic journey. So they'll have their own plans. As far as we are concerned, ours is a permanent vehicle. I think we like permanent vehicles. We are one of the few permanent vehicles in the KKR world outside of the US, and we would like to build a permanent vehicle into a vehicle that one day can exist for perpetuity, and I think listing is a great route. But there's no imminent plan. I mean, the way we are today, what we do is so institutional. I think it's tough to get it listed, and why should we list? We make a very good ROE. We clip away our coupon, as they say. We don't have to list it right now.
But it's a long-term plan.
Absolutely. I mean, long-term plan,
okay.
Absolutely.
So, Sanjay, at the present moment, how important is easing of rules for the prompt corrective action banks?
Easing of the PCA rules?
Yes.
I don't know. I think what has happened is they've put the banks into, as I call, under administration without really having a game plan of how to, A, get them out of it, or B, what is their role? Because a lot of these PCA banks are now becoming a bit of an obstruction in the consortium of lending. So neither are they able to lend, nor are they able to let you lend. So, it's sort of, if your company has a couple of PCA banks in the consortium, I think they're stuck because, they're not able to maneuver and do anything. So I think the RBI will have to look very hard. I'm not saying for a moment that you just go release their PCA banks,
yes.
But, they have to be, if they're not meant to lend, that's fine. But then they let the better banks or NBFCs lend to their companies. Otherwise, the companies are just going to go down right in front of our eyes.
The NOCs are not coming. To put it simply, the PCA banks themselves are not releasing funds to their exposure companies. And not just that, those companies are also not getting an NOC from these lenders for others to give them money.
For either better banks or new NBFCs to give them money. So just think of it. If you have a mid-sized company, and you have maybe had one defaulting interest rate or whatever, and there's a PCA bank, who's not able to give you more capital. In the old days, you could sit with your client and you could restructure. I mean, yes. Restructuring is a part of banking, okay? Yes. It's not something that is so bad.
Yes.
Now, I think the whole temperament right now is, we can't restructure anything. The PCA banks are even further strapped. Neither can the restructure, nor do they give you NOCs, nor can they release the money. So think of this 1,000 crore company. If it's even growing by 10%, it can't get additional working capital. It then probably cuts its own supply chain,
yes.
which is a smaller SME, who cuts it further, who has a smaller SME behind it. And that's exactly what this vicious cycle is. And that's when you begin to lose jobs at the bottom of the pyramid. And I think this impact we need to really, really fathom and tackle very quickly. So hopefully the RBI will attack this problem. Again, I'm not saying let the PCAs go, let the PCA banks go, but let them lend, have a new circular out, new regulations, or maybe recap the banks. But
there's enough clamor for relaxation of these norms, and RBI is working on that. And we are closely watching that as well, Sanjay.
Otherwise, my only point I want to make is if you don't do that, you're actually creating NPAs out of non-NPA situations, and that's my worry here.
All right, fair point, and that's an important point that we are focusing on. All right, talking about some of the other areas in terms of the NBFC situation and the financial services, you had been interested in probably an asset like a Shriram kind of an asset in the past. You had also bought a minority stake in Bharti Infratel in the past, where the chances were that you will go further with those. Now, those themes stalled because of many changes in the market conditions as well. Where are we when it comes to taking these large bets based on large mergers that you are looking at?
We should do it next year end.
That's why I didn't ask you in particular
December 2019
about when
we'll talk about them. I'm not going to comment on the companies. Look, you know the rules. It's pretty straightforward. We aren't going to comment on any of this. But I just want to leave you with the thought that, as I said earlier, we are, I think, good at working at long-term situations. Good corporate dialogue. These take years and years to fructify in general.
Yes.
So not to look at the specific names that you said, I mean, you know, the names get thrown around for every deal that's around, so one has to live with that. But I would say the only thing is that we do work on deals for quarters on quarters on quarters before a deal even takes shape, and even then, getting a deal done is not easy.
Of course.
So, but I think the deal environment actually on balance is becoming more interesting. There's a lot more actionability than before.
Okay.
And just if valuations can correct a little bit more from a selfish point of view, I think you'll see a lot more FDI coming in, a lot more.
I think your prayers will be heard the way the markets are going right now. But also, just finally, in terms of outlook, if you can give us a little bit of sense on how much investment can really come in from KKR in the year 2019 into India.
Again, I don't have a number, we don't have a formula, but look, we, as a private equity and VC asset class, we had an okay year. This year, we brought in about $22 billion, right? Last year, I think, was about 30 for the whole industry. I think the next year, once elections are out of the way, I mean, look, private equity and venture capital, I don't think they care that much about election results. They're much more long-term money. I would be surprised if it's not $30 billion again next year. I would be absolutely surprised.
Right.
And, you know, people like us and some of our peers and some of the venture capitalists who are well settled, well embedded with good teams, I think sky is the limit, yeah.
All right. And with that, on that note, all the best for the year 2019 to the entire team of KKR. Sanjay, thanks so much for your time here on CNBC.
Thanks a lot. Thanks, guys.
All right. With that, it's a wrap on this edition of Big Deal. But keep it with CNBC TV 18.